PMI Composite Flash. The numbers, the composite, 52.8, slightly higher than last month's number of 52.1, but lower than the prior final of 53. The manufacturing index, 52, flat to the prior final, but below the 52.3 of a month ago. The services index, this is where we saw some interesting things. 53.1, higher than last month's 52.3, and a bit lower than the 53.7 prior final. Here's some of the notes. Price pressures rose sharply in the service sector. Manufacturers, input prices rose and selling prices rose during the period. Rates not seen since July 2022. Think about that. So we're getting that short spike in prices at the PMI level. Higher costs passed on to consumers. 2/3 of manufacturers reported a higher input cost attributed to tariffs. So maybe some of the things that Jerome Powell was talking about are starting to hit in some of the PMI numbers in the prices paid. So it's important to watch that. Even though the bond market doesn't look like it's reacting to it just yet, we are seeing some higher prices hit the PMI numbers. Now, our second number of the day, existing home sales. And that was the annual rate, 4.03 million, a bit higher than the 4 million prior, and a nice beat over the 3.95 million expected. That brings the month-over-month level to up 0.8 and the year-over-year level to down 0.7, not surprisingly. Obviously, with rates resting at higher levels, we have seen some sluggishness or slowing down or dead in the water activity in the housing sector. So a nice little bump in existing home sales with month over month up 0.8, year over year still negative 0.7. So good solid numbers out of the PMI Composite Flash, watching for the higher prices paid and a nice beat on existing home sales of 4.03 million.